Good morning, everyone. Welcome to the new DecisionPoint Trading Room. My name is Erin Swenlin from DecisionPoint.com, and I have Carl Swenlin, who is the founder of DecisionPoint.com, my father, yes, who will be here to answer your questions. He's going to go through the market in general. I'm going to cover sectors, and then we'll take your symbol requests. Symbol requests, again, go in the Q&A box. The chat room is for you. So go ahead and go in there and say hello to everybody. We are not registered investment advisors, so all trading decisions are your own. Anything that we say or talk about in this trading room or in our blogs should not be considered a call to action. I will oftentimes talk about buy points and sell points. This does not mean that you should rush out and buy it because the buy point is here, or vice versa, sell it because the sell point is there. Let's see, anything else? I don't think there is anything else at this point. So with that, I'm going to hand it over to my dad to share the screen. He's going to go through what is going on right now in the market and cover Bitcoin and oil and all of that. So take it away.
Please bear with me. This is a new format for me, and not having done it before might be a little rough here and there. Okay, the market currently is down, but not by a lot. And we were kind of expecting this action as of Thursday, and I'll get into that with our climax chart. And that is, this control panel is right in the way of my tab.
You should be able to grab it and move it.
Yeah, I know they say so. That's what they say. Okay, we do what is called what we call climax analysis, and basically that is when certain indicators on this chart, we have net advanced decline for S&P 500, net AD volume for S&P 500. We have VIX reverse scale log chart that we watch, but that's not particularly a climax indicator. But we like to keep an eye on that because when we hit these outer band with one band or the other, it's overbought, oversold indication. And then we have S&P 500 total volume, which is not updating at this point. It's updated at the end of the day. And we have NYSE up-down volume ratio, S&P up-down volume ratio, and then we have the down-up volume ratio for both of those indexes. So, I have these arbitrary lines where when it hits that or goes above it, that we consider to be a climactic indication. So without further ado, what we had back here at the beginning of the month was an upside initiation climax. Climaxes in their nature are exhaustion events. Basically, it could be the last thrust on this, but when you get a reversing of direction on price, we consider it to be initiation, and we expect more movement in that direction. Any climaxes that follow that initiation would be considered exhaustion climaxes. And on Thursday, we got an upside exhaustion climax. And as you can see, we've been consolidating a little bit here for the last, 2 trading days, including today. That is a mild reaction to an upside exhaustion climax. It can be very vigorous on the downside. But this is certainly a good reaction at this point. It doesn't mess up our uptrend yet. There's another one I wanted to show. But we've got an upside. Here we go, upside exhaustion climate. You see we had quite a nice pullback from that one. I better not go into this too deeply because it might get boring. Okay, here are some primary indicators that we've come up with in the last, well, it's about 2-3 years ago that I developed these indicators. We know what the Silver Cross Index measures the percent of stocks in the index that have the 20 EMA above the 50 EMA. The Golden Cross Index is the famous Golden Cross where the 50 EMA crosses up through the 200 EMA. So that's a long-term indicator. The Silver Cross Index is a intermediate term indicator. They're really oversold at this point. Oversold in the bear market doesn't mean we're going to get a great big rally, but you never know. And this so people can, looks like this rally here, but they fizzled. Looking at Bitcoin, the new tulip mania, they've got the about 20,000 is a good support level for that, and you can see where it derives here. But this is a big rounded top. I do not expect it to recapture any of these prior highs. I think that it's on its way down to this level right here, about 10,000. I saw a question about NVIDIA.
Yes.
Let me look at Apple first, and here we have it breakout above this declining tops line, but we've got overhead resistance right here, and this is where the rally has come from. Apple really puts a lot of weight on the averages where it's included. Okay, NVIDIA. This is definitely a long-term sell. I mean, at this point, I'm not saying we should sell it now, but at some point, persons would have had to gotten out of this after it came off the all-time high. And I don't see it being a buy point yet. That's my opinion on it. I don't see any good news in the OBV or the.
Yeah, it looks like that PMO in the thumbnail is topping right now too.
Yeah, right. And below the signal line, and that's bearish in itself. Okay, I think I've covered all.
Oh, well, let's look at the big four: crude oil, gold. Everybody likes to hear about your opinion on gold for sure.
Okay, well, let me get to. Let me change. Let's look at the dollar first. It's rallying again, and I heard where this rally and dollar is from people a flight to safety from other currencies. And let's see. That should have a bad effect on gold, and it has been. That's primarily why gold's been doing so badly. And but today, gold's down just a little fraction. So that's a good sign. That's gold being stronger than it should be against the dollar. Let me get to crude oil. A breakdown beyond below this level of support and a snapback toward it. You can also look at the rising bottoms line and a breakdown from that and a snapback to it. So it's in a downtrend, and we just got a neutral signal, the 20 crossed below the 50. And finally, treasuries. T-bonds. This is the 20-year and it's strengthening. I don't know how long that can last, because interest rates they're pretty sure it's going to be another 0.75% hike this month. So they're having a bounce, but I don't see it continuing. Here's the 10-year, which everybody says affects the big tech stocks, and it's currently going down, but from that high there, but it did bounce off the support line, and we shall see. It's still got a ways to go to break out.
Yeah, it still looks really toppy to me. You know, that's the thing.
Yeah, I agree. And but again, if they keep moving the prime, the
Fed rate, yep.
Yeah, then it's doomed. The rates are going to continue back up.
All right, I'm going to ask you to look at one more chart, and that's gold miners.
Miners.
Okay. Yes. We have a lot of people who follow gold miners in here, so. Oh, you had it there, right under the gold.
Gold. Did I?
Yeah, you did gold. Did. So yeah, we'll do the.
Yeah, okay, I did. And then miners here.
Perfect. It's not a good look.
No, it's trending down, and it doesn't necessarily track gold, but it kind of, I mean, they're related, no doubt, but it's kind of independent in the way it moves. Yeah, I should say on these sector charts, we have a lot of indicators, and somebody commented that this is like analysis paralysis, or just too many indicators. But these indicators are not related to one another. I mean, they're different indicators, like stocks above the 20, above the 50, above 200. I mean, that's checking that metric in different time frames. And stochastics, Erin loves stochastics. So we have that on there. She also likes RSI. That's hers. I'm a PMO and OBV guy.
Well, one thing I would note on that chart too, which we've been talking about a lot in our DP alerts, is the fact that there's kind of no heartbeat right now under the surface. I mean, we don't have any of the gold miners with price above their 20, 50, or 200. And it's been that way for weeks.
Right. And you can't, it may be getting worse and worse for all those stocks, but once it hits zero on these charts, that's all you can know.
Right. Exactly. No, I mean, we'll look for a bottom, but wow, I mean, it's just with gold down, and then of course gold miners, as we were saying, they're affected by gold, but they're also affected by the winds of the market. And so with the market down, with gold down, it certainly put them in a bad position. All right. So I'm going to go ahead and grab the screen. Actually, we have another question for you, of course. Everybody throw those questions in. I mean, those are really, now that we have Carl in this room, we should take advantage of asking the master what he thinks about some of our stuff here. But one of the questions that I know that we follow it pretty close is UNG, natural gas. Somebody was wondering John's wondering if we should entertain a long position in nat gas finally, or what are you thinking about that chart?
Let me look here. Okay, well, we've got a nice PMO bottom and breakout above a declining tops line. I'd say it's looking like it possibly setting up a reverse head and shoulders. Mm-hmm. So I think, and I should emphasize, I'm not a trader. I've never had the time to trade. I've been so busy building a business along the way, publishing what we do. But that I would be looking for that and that other shoulder, and that'd be probably a good entry point at that. But Erin's a trader in the
we'll look at those 5-minute charts for that too. And then just in general, I mean, long term, do you see gold or the dollar being stronger in the longer term?
I see gold being in the long term. I have a large percentage of my portfolio in gold, 15% to be exact, which is a big chunk. And I wouldn't go for any more, but that's what I have. And I expect that it's inevitable with the way things are being run nowadays that we're headed for some really bad times.
Right. And of course, that is our main store of value, as we often talk about.
Right.
All right. Let's see. Wow. We've got, okay, so we have lots of indicators, and Matt, thanks you for your commentary on them. What does your checklist for indicators need to show? Like what level or what trend in order to initiate a position? And again, everybody, Carl isn't a big trader, but he's certainly a master of trend and condition. So what are some of the things that you would have to see? I mean, what I tell people often in my trading room is that our trading room, I should say, is that, I don't personally buy any stock that doesn't have a rising PMO, period. I'm just not going to do it on a daily chart. I need to see positive momentum. I'm a momentum trader, so it's got to be there. So for me, that's kind of the key one, that if the PMO is not rising, I mean, why chance it if there's, downside momentum still showing, and particularly in a bear market? I mean, I think we have to be ultra careful and certainly be really careful with reversal plays. So that would be a caution I'd have on the nat gas chart too, is, trying to play reversals in a bear market is pretty dangerous. So what are some of the indicators, like a checklist for you, that you would want to see?
Well, actually, that sets me up for what I wanted to talk about today. It's like, let's go back 40 years, just as I was getting sucked into this mess. And a friend of mine told me he was making a killing trading options. And then he gave me Granville's book. And I read that book, and I was the smartest guy you ever knew at that point. I've gotten less smart as the years have gone by, but I was very smart then. And one of the things I did was I developed an indicator early on that I believed what appeared to me that it predicted trend changes and directions, and kind of pinpointed them. So to test it out, when I saw that it was going to change and turn up again, the market, I was following about 150 stocks at that point, and I picked 30 that I thought would do well in an uptrend. And at the end of that period of whatever it was, a couple, maybe 4 weeks, whatever, and it turns out that of 30 stocks that I picked, 28 of them had gone up. They had been profitable. And my friend says, "How did you do that?" And it was because I picked stocks that I expected were going to go with the trend. And that's pretty much it. That is where I focused my efforts in analysis and building indicators and the decision point alert. Is to determine the trend and condition of the market, condition being overbought, oversold, etc. And that's, if you get the trend right, it's just incredibly high odds in your favor that if you buy in to go along with that trend. It's just, that's it, especially these days. We've had, back then they didn't have index funds and ETFs. And now everything Stocks are all in the, in these indexes. And when you buy the index, you're buying all those stocks, whether they're good or bad, they're in the index. And so it's even more favorable in terms of getting the trend right if you're buying with the trend. So
right.
That's it. And boiling it down, it's just like this chart. After this kind of a decline, when you see the PMO turn up, that would be, my entry point would be as it turned up. And Erin, I think, likes to wait for it to cross the signal line, which is fine. Everybody listening to this is going to have a different methodology,
process,
a different process, a different time horizon, different circumstances. That so we give our best analysis based on what we see and what we feel, but that suits us, but it doesn't necessarily mean it'll suit you.
Correct. Yeah, I will buy before the PMO crosses over, but I have to see the chart pattern, or I have to see a breakout above an EMA. I have to just see some kind of hint. Certainly the breaking of that downtrend. My problem with the UNG, I would say, is just and it's looking good, but that $22 level, when you compare it, that 2021 top, like I would feel more comfortable if it got above 22 or 23, but that's me because I'm a momentum trader. I need to make sure the price is going my way before I jump in. But that means I do miss some of the upside. So it's just, again, like you're talking about, it's kind of risk management where you feel more comfortable what the sweet spot is for you.
Yeah, I like to catch it before it breaks out like this. This gives you the clue right here when it turns up. And that happened right around in here. So
yep,
that's
true.
But that's different comfort levels.
Yeah, absolutely. Exactly. I did want to let everybody know, if you are watching the recording of this, if you would like to join us live on our homepage, you'll see an ad for this and a register now. That will get you the link so that you can come to the trading room live and talk to Carl, ask him all those questions that you maybe have always wanted to ask him. And he will be with us. I don't know if you'll be here every single week, Deb, but the majority, he will be here. So if you would like to join, the link to sign up for the Zoom meeting is there on our homepage. It's a recurring meeting, so the meeting number never changes. You can write that down and just join that way, but you'll have to register the first time out to get all that information. All right, I'm going to grab the screen, make sure there aren't any. Let's see. Gordon says, I really like Carl's comments about following the trend. In these volatile markets, I wonder if we might have better success by trading on an intermediate term or long term rather than the short term. As far as the trend, I'm guessing, is the question. Because I know one of our bear market rules, of course, is that in a bear market, there's no such thing as a buy and hold or a long-term, intermediate-term trade. You need to manage every position as if it's a short-term trade, just to be on the safe side, because those long-term trends, while they can hold up, things can obviously turn on a dime, as they say, particularly in a bear market. So that would be my little comment, Gordon, about that. I would say in a bull market, and I think I'm speaking for you here, you're going to have a better time of those intermediate and long-term trends. I mean, you can get in on something and it'll, more than likely last. The problem is in the bear market, as you pointed out earlier, when you were going over this chart we're looking at, you get those spurts to the upside, but eventually it just goes back down. So you have to figure out how to take advantage of those short moves. But overall, as you can see, the trend is down. And so this is a representation of a lot of the stocks right now that are out there. So you have to be careful that way. All right, I am going to grab the screen. Dad, if you want to, you can kind of peek into that Q&A box. Right now, it looks like there's pretty much mostly, let's see. Okay, here we go. Lillian asks, how do you hedge your portfolios in a bear market? I will say for myself, my hedge usually is to just be in cash. So I like to just keep very little money in play in a bear market. And obviously you can hedge. And I have in the past, I've hedged the Dow with SDOW, SDOW. We've talked a lot about the interest rate, PFIX. SOXS is a reverse on the semiconductors. But I would say right now, since this, when we get these bear market rallies, they tend to be led by those semiconductors, the Apples of the world, because they do have such a kind of a leadership role in a lot of these indexes. And generally, when you're going to get those rallies, that's the growthy area is where you're going to see it more than likely. But then it's going to peter out really quick. So the hedges work to some degree, but you really have to be nimble, in my opinion. You have to be able to be here, looking at least every other day just to keep that hedge, readily available to get out of when you start to see those bear market rallies. So that's what I do as far as hedging portfolio in a bear market. And I know for you, Dad, it's pretty much gold. Am I right?
Well, yeah, I'm a cash guy, and at this particular point, I'm into gold for very heavily, just because as I already said.
Mm-hmm. Exactly.
But one of the ways to hedge would be the inverse funds, but I recommend using a one-time reverse rather than three-time reverse. It's just they tend to be really volatile. So that you study it before you do anything. Study it, see how it works.
Yes, absolutely. And that is the problem with a lot of those index funds. The inverses is that they are what we call juiced. They're going to be right. 2 times, 3 times. And if you don't have the stomach for that kind of volatility, you probably want to look elsewhere.
I read an article just with a day or two that talking about shorting against the box. What that means is you have a position in, say, Apple, and you think it's going to have a downturn, so you short Apple. You keep your long position, but then you short it. And I'm not saying don't do that, but just be aware there are tax consequences to that. So check that out before you do that. And I'm not a tax guy. But
yes. And Frank asked, do you have anything against put options? I will just tell you, Frank, that I don't trade options. That's just not my cup of tea. So I don't really talk about those in these trading rooms. I know you've at one time done options, Dad, but I know that's something you're not involved in anymore either.
Right. Well, I went, lost our life savings at the very beginning, trading options. I was very smart then, I'm telling you. So, no, I think it can work, but you better know what you're doing. That's all I'd say. That burned me, and I don't mess with them.
Yeah, and I kind of watch from the sidelines, so I think that's why I've never gotten involved. Okay, and let's see. Do you prefer gold, the gold metal, gold miners, or the gold royalty companies? I know for me, I'm kind of in and out of all of those. So, but I know your gold positions are generally in the actual metal.
Right. I have an index fund. Mm-hmm. I own some actual gold, but I'm not in a it owns gold. The fund, it's IAU. It's not just based on paper transactions. They actually own the metal. And that's the one I prefer.
All righty. Okay, let's get into. I'm going to take the screen. I haven't even looked at my screen for half an hour.
The macro.
Okay. So here we go. So I'm going to look really quickly at some of our sector charts. I don't go into them in detail because that I kind of save for Friday's Diamond Mine Trading Room. So if this is something you do enjoy, part of the DP Diamond subscription, not only do you get 10 plus stock picks per week, but then you also get a 1.5 hour practically one-on-one with me on Fridays, just for subscribers of DP Diamond. So if you're really liking the trading room situation, that subscription might work out for you. Okay, so we're going to look at just a couple of these sectors. Let me just get to a chart so I can get to my chart list here. And I'm pretty sure, yes, it was healthcare last week. I believe this was my sector to watch last week. I do these reports all the time. I always feel bad. I'm like, I think I covered that. But you look at so many charts. So healthcare is a really great looking chart right now. You have a nice looking kind of a reverse head and shoulders look here. It's not really a textbook reverse head and shoulders because they really should be coming off of a downtrend rather than an uptrend. These are reversal patterns, so that's typically what it is. But let's face it, this does look like a nice basing pattern, whether you call it an actual reverse head and shoulders or not. But with XLV, we did finally get that breakout above those key moving averages. The RSI is positive, and really what attracted me to the healthcare sector, and we've been watching this in DP Diamonds for at least 2 to 3 weeks, healthcare and biotechs. But one of the things I liked about this chart was what we sometimes call a bull stack, right, Dad? So you have a higher percentage of those above the 20 than you do above the 50, than you do above the 200. This tells you that there's improvement going on under the surface. One of the reasons why is because when you look at the actual ETF itself, you can see how those EMAs are configured. 20 is on the bottom, then there's the 50, and then the 200. Most of the stocks that are going to be in XLV are going to have a very similar setup with their EMAs. So what you want to see is, yes, stocks getting above the 20, more and more of them, and then you get more above the 50. And then the last thing really to improve is going to be price above the 200. But I really like that we have so many stocks in XLV with their price above their 20. I think that that's looking pretty healthy, especially when you compare it to a Silver Cross index that is about 30%. And again, the Silver Cross measures how many of the stocks in healthcare, in this case, have a 20 above their 50-day EMA. So that's improving, and we're seeing that improvement under the surface with stocks above their 20 and 50. So right now, healthcare is an area that I very much like. You can see the PMO getting positive. I mean, I think this chart is really shaped up. And now what we're looking for is a breakout above this area of resistance. And you can see that goes all the way back at about 135. So that's kind of what we're looking for next on healthcare. XLK, everybody is, of course, interested in the technology sector. And this chart should look very much like the S&P 500, which it very much does. Right now, we have a double bottom that has shaped up, but unfortunately, once price hit that confirmation line, it has turned down. The 50-day EMA was also there to provide more resistance, and clearly that is where technology has succumbed. You have RSI is now back in negative territory, but we do see that we've gotten some improvement under the surface, and I think that this really does speak to the fact that technology is kind of a leadership group when the market's going to do well or not do well. And like I said, this recent rally has been led by a lot of these growth stocks, which happen to be in technology. And so that's why we're seeing this improvement under the surface. But I was hesitant to make this my sector to watch, mainly because things were starting to look a little iffy here. We were coming up to overhead resistance. So although we have what looks like a pretty nice basing pattern here, it's just not really fulfilling the way it should. So I'm still watching this area closely, but between XLK and then of course XLE has been struggling. And, we had this big rally and I told everybody I don't trust it. We had the rally last week on oil and that helped energy. And I kept telling people I don't trust it. And mainly because we had a negative RSI. The PMO was in decline. We had very little participation under the surface for XLE. Yes, we have 100% with price above their 200, but that's going to start to deteriorate when you look at XLE struggling to hold that 200.
We have so much fundamental information that tells us this shouldn't be happening. It shouldn't be dropping. The price of energy shouldn't be dropping. Oil shouldn't be dropping. But that's why you have the charts.
Exactly.
Whatever you think, look at the chart and it'll tell you if you're thinking right.
I totally agree. We get a lot of noise out there from, various media outlets, social media. And ultimately, this is where, I'm a technical analysis purist is what for good or for better or worse. To me, it's all about the chart. Everything's baked into the chart. If I have a chart, I am good to go. I don't need all of the fundamentals. I do like to know when earnings are, and I like to know if it pays a dividend, but really for me, it's all about the technicals on the chart. But again, that's kind of me. All right, so there's a couple of the sectors I think that have been really of interest to everyone, but I like healthcare right now. I think that that's one of those really strong areas. So I'm going to go into, I did see a request for XBI, which is the Biotech ETF. So I'm going to put that up and then I'm going to explain the trading. I hate using system. I hate using rules, but guidelines, I guess I think is the best way to put it. So the guidelines for trading that I use at DecisionPoint. So the first thing is we look at a daily chart on the left. This is where I determine whether I like it, whether I want it, whether I don't want it. I look over here first. If I decide I want it or if I'm looking to sell, then I go to a 5-minute candlestick chart. And I'm going to put XBI in here. Oop, not SBI. Let's try that again. All right. So then I have that 5-minute candlestick on the right. And this is what's going to tell me when I want to do those buy and sell points. And really, it comes down to 2 indicators for me. And that is the RSI and the 5-minute PMO. So it's a 5-minute RSI, 5-minute PMO. And I want to see a conservative entry is a PMO crossover and a positive RSI. So there's no reason you can't make it a more aggressive entry and just do the crossover, even if the RSI is negative. But typically what I find, and you can see it on this particular chart, let me get my inspect tool out, is you'll get that crossover, but you don't have the internal strength. You don't have a positive RSI. So a lot of times these signals are going to kind of crumble or they're just not going to do much. So that's a lot of reason why a lot of times I will wait for that conservative entry rather than a more aggressive entry. Now, if a chart pattern has a certain look or if there's a trend that's developing on that 5-minute chart, that might change where I enter, whether I'm going to be aggressive or not aggressive. But when I look at this chart, at least for today on XBI, not a whole lot of entries, could end up with an entry, but really when you've got an RSI that's negative pretty much all day, probably not worth trying to get into it. But if you start to see that breakout, like for right now, I would be looking at this zone right here. So these tops this low, that's the resistance zone. And so for me, I would need to at least see price break out above this, preferably above this level. And then I would probably start going and looking more at these indicators. But in general, You have to be careful. Now, sell point is really easy, at least the way I do it. I don't need a negative crossover. I don't need a positive negative RSI. All I need to see is the 5-minute PMO turnover. As soon as it turns over, I know there's going to be negative momentum. I'm more than likely going to end up selling at the right time. So for back here, you can see the PMO kind of topped back here. So that would have gotten me out there. And then you can see that that would have ended up being a pretty good sell point. Similarly here, you probably would have gotten blindsided by this first candlestick, but looking at that 5-minute PMO, it pretty much was yelling, get out, get out. So there's, that's where I use the 5 minutes. So I'm not going to go into much more detail because now we're going to start looking at those symbol requests. And Dad, feel free to pop in there at any time.
On the 1 year, or that's not a 1 year, it's a 6-month chart. Look, you've got a double bottom.
Yes.
Nice double bottom. And look at the PMO. It's got a bottom above the signal line. I mean, this is a perfect setup. You wouldn't have to wait till the, just now to be getting in.
That is true. I will tell you that XBI, I believe, was a DP diamond 2 weeks ago at least. So we did take advantage. I think we talked about it on the breakout above that 50-day EMA. But it was already, those biotechs were already on our radar because we were getting charts that looked a lot like this. So personally, I still like biotechs. We are struggling a little bit here at resistance, which makes complete sense. Kind of a natural big rally, pause. And now we're going to start to look, here's that perfect flag formation. We're making the flagpole. And right now, maybe we're making another flag on XBI. But really, when you look at the technicals all the way around, positive RSI, it's not overbought. Stochastics oscillating above 80, which is, pretty much what you want to see. So I think the XBI chart looks great. I just don't know that a buy today. I mean, you could buy in here because you do see that 5-minute PMO is rising. But then again, that RSI being negative, there's internal weakness here. So either you can take a chance, get in at this low and look for the move, but I'd say we're kind of in the middle of forming a flag or some consolidation. So for new money, just be really careful at that point. I think you should just wait until you get a test of the $80 level here. I think that would make more sense if it's a new. If you have it, definitely be a hold. Okay. I'm going to go through here. I haven't looked over here, so. Yes. So is it possible to have this stock chart set up with all the indicators in StockCharts? Absolutely. This is exactly what we're using as StockCharts. If you like a chart that you see on the trading room, I'm more than happy to send you the chart style. But if you have this recording, you're going to see exactly what I use. And right here, I'm going to show you so we can, if you want to take a picture, and then you can use that as well. This is the relative strength area, and these are not well known, but if you set these up and then make this your chart style, the dollar symbol to the SPY, dollar industry to the SPY, if you do that, then every time you pull up the chart, it's going to look for that symbol and it's going to look for that industry group. So you don't have to do that separately every time. So that's a pretty good setup. And then as far as the 5-minute candle, again, here's your setup here, and you can take a picture and have that ready to go. But as I said, if you have to be a StockCharts member, and if you are, I can send you these chart styles. Just send your email to support@decisionpoint.com, and I'll try and get to you as soon as I can.
How about
Caterpillar? Are you kind of paying attention to the?
Yeah, that viewer was the first in, so we definitely ought to get.
Yes, that one. There we go. All right, so Caterpillar. What bothers me about this chart is there's no support level to compare it to. So I have to go to a weekly chart just to even see if we're at decent support. So let's see. So that's a main support area that got lost and it has not been recaptured yet. So again, for me, I need some more confirmation. I need to see price able to get above that level and get back into this trading range. Because it could be a pretty, once you get back into that trading range, even if you're just trading the range and you got in near the bottom, I mean, we're talking about, 32% to the upside if you can get in down here. So I know why you're chomping at the bit when you look at this chart, but, we're in a bear market. It bothers me.
We're in a bear market.
Exactly. And playing reversals are just so dangerous. So you need to get those extra confirmations, but let's go ahead and we'll go back to the daily chart. All right. So we know that this is pretty much the, matches up with that longer term resistance. So we're going to keep that one there and keep that in mind. And as I said, you can see we got that big gap up and then we got a filled black candlestick. So those are bearish. So right off the bat, this rally off of here was suspect. Yes, you got above that 5-day EMA, but a filled black candlestick means that although the price closed up, the bears really won the day because they were able to bring that price down. And in this case, well below the opening price. So that is what you get as a filled black candlestick. And typically these lead to lower prices. But as you can see, we've seen a few back here and that's not what happened. But this is what happened. And now we've lost that 5-day EMA. And as I said, for me, especially looking at that weekly chart, I just would need a little more confirmation. And again, as Carl was mentioning, we're in a bear market. Playing reversals, again, it's highly, highly dangerous. So I like to try and find, I can tell you that they don't all look this way in DP diamonds, but when I do, I like to have the EMAs, at least the 50 above the 200. It just gives me a little bit more, basis in the longer term. It's more bullish configuration, but in a bear market, even a 50 above the 200 isn't going to necessarily help you out. But yeah, Caterpillar, I can see a little bit of improvement here, but this is where the relative strength comes in. And this is the industry group to the SPY. This is the symbol to the SPY. And then this is the symbol to the industry group. So first of all, you want to try and find those pockets of strength, right? So you want an industry group that is improving its relative strength against the SPY, particularly now because we're in a bear market. So you could outperform the SPY and still be going down. So we really need to see that outperformance. And you can see that this particular group is not outperforming the SPY. In fact, it's really underperforming it. And consequently, we're seeing Caterpillar, which is kind of a leader within that group, really not doing well either. You can see that Caterpillar to the SPY is falling, but this is an important one that not a lot of people think about, and that's the stock to its group. You want to find those stocks within that group that are showing outperformance against the group. That way, even if you are in a group that's maybe fading out, if you can find the outperformance with the stock within that group, you're going to have a little better chance of it doing what it needs to. But relative strength on this chart tells me, regardless of what's happening elsewhere, I'm not a fan. Okay. So coming over to that 5-minute, I'm not a fan, but if you were talking buy points, we had an aggressive buy point come in here. Aggressive because the RSI is still negative. And sure enough, that buy point failed. So this is why you have to be very careful there. So anyway, you can see that Caterpillar did have an aggressive buy point coming in, but it doesn't look like we're going to get an actual buy point today. Sell point came in over here. You can see on Friday when it turned over, perfect time to exit. He would have saved you from all of this decline. So right now you're just waiting for that RSI to get positive, and that will confirm the PMO buy signal that's happening here. Right now, we don't have confirmation, and you can see how it failed back here. So that's why you have to be really careful, especially when you have a big decline going on like we have right now for Caterpillar.
I think you're hearing a lot of people saying next.
Next, yes, okay. Let's see, KWEB. And this is the China internet. And I've been asked about this one, I think was the diamond mine. I'm not sure. Let me get my fan on. It's starting to flash again. Okay. So KWEB. I don't like this. I can tell you right out the gate. Big gap down below the 50-day EMA. Again, that 50 is well below the 200. So you have to be really careful. PMO sell signal. I mean, I don't see anything good here.
Let's see weekly.
You mentioned that they're all down. Baba is down. Alibaba, not a surprise. I've not been a fan. I think I was asked about this one maybe on Friday, and I just didn't like the way it was setting up, and overbought PMO and etc. Not a good chart. I'm gonna pass on the 5-minute on this one too.
I'd like to see the weekly on that.
Sure. Okay, Web. I'm going to cover this up so we don't get confused.
Well,
so there's your strong resistance level. Yeah. I mean, that's pretty strong, and it failed there. And we know on the daily chart, it failed at the 200 as well. Drop below the 5-day. I mean, maybe if you really wanted to be Pollyanna about it, a cup maybe with a handle developing here. I mean, we do have the PMO rising, but the weekly RSI just turned in negative territory. So not seeing anything I like there. Okay.
How about QCOM?
Sure. Yeah, I'll let you pick out the stocks. That's good. You can actually look at them maybe in the background, and we'll see what's going on. All right, so I'm going to get the daily back here. Although since we had the weekly, this is a bounce off very strong support. So, the weekly chart's starting to improve. You can see that weekly PMO is turned up. We haven't seen that in quite a while on QCOM. So that's not bad considering.
Yeah, that's certainly potential there.
All right. Nice double bottom here. So we saw the weekly PMO turning up. Daily is the regular PMO. The PMO on the daily chart's looking a little iffy, trying to top beneath the 0 line, but RSI is still positive, and I do like that double bottom. But again, I'm a momentum kind of trader. And at this point, just the fact that it failed here at the 50, I would need to make sure that this pattern is confirmed. And the pattern isn't a pattern until it's confirmed. And that may mean a breakout above this confirmation line. And you can see that matches up with the low back here in March. So I think that level is going to be very important. Everything else is, looking pretty good here. I mean, you've got nice relative strength against the group. The group is kind of doing so-so, but if you're going to be in a so-so group, it's good to find one with some leadership here. OBV rising. I mean, it doesn't look bad, but for me, I really would want to have some confirmation on that double bottom. Oh, I didn't put the QCOM one over here. We're almost out of time, unfortunately. Buy point arrived back here when the RSI got positive and you had that PMO buy signal. Now, like I said, you could have certainly gotten in on an aggressive buy here, but you probably would have been sitting there biting your nails as it paused and didn't get above this area of, couldn't stay above this area of resistance. We have come up, we're pulling back, but it's holding right here. So this looks like it could be a pretty good buy point on this chart at this point. Buy point at this point. Okay.
ESTC.
ESTC. All righty. Well, certainly an ugly looking 5-minute chart. I haven't drawn it in, but I can tell you that looks like a looks like a rising wedge, although we have flat tops and rising bottoms. So in the short term, we're actually looking at a possible ascending triangle forming here.
Yeah.
Let's just do this really quick. So you've got the flat top, rising bottoms. So, you know, and then you have a 20, 50-day positive crossover going on, a silver cross. All of this on a 4.5% decline today. PMO is still rising. RSI is still positive despite this big pullback. It is in software, so we really need to see this bear market rally continue. Relative strength, I'm not really seeing much, and stochastics did top. I mean, to me, this is a little bit iffy. Again, I would need the breakout before I would consider my own entry here. And I really, this is an ugly 5-minute. You know, here was kind of a fake out buy point. I mean, it had just barely gotten positive on that crossover. Didn't really work out. Looks like a filled black candlestick in there. Very toppy. I think if you were really just, you know, hell-bent on entering, a bounce off of this support might make it a little bit more interesting, but I don't see an entry at this point today. Not with a PMO sell signal here. All right, I think we've got time for maybe one more here. DRV, let's do DRV. That came in earlier. And then we'll say our goodbyes. I have to say, it's been really great having you in the room. I haven't had to talk the whole time.
The symbol wrong, you got DRIV. It should be DRV.
Oh, DRV.
Yeah.
Thank you. Real estate bear. And this is one of those juiced ones. So again, be really careful here. You know, I've actually liked the real estate sector chart. It doesn't look, I'm going to actually show it that chart before we talk about this real quick. Because I think if you're going to talk about a daily bear on the XLRE chart, you probably should look at the XLRE chart with all of our stuff underneath. So yeah, double top, looked like a flag, kind of failed there at the 50. I mean, there's the PMO is still rising here. So I don't know that I'd be wanting to go into a 3 times bear fund when the actual sector is still showing rising momentum. I mean, it's not a healthy chart by any stretch of the imagination. Stochastics turning down, but they're still positive. You know, we don't have great participation, and we're starting to lose some participation, but I don't know. It just doesn't look bearish enough that I would want a triple time. Let's put it that way. I mean, maybe if you wanted to do this and, you know, not do it triple, that might be better. But of course, I don't know all the inverse funds. There's probably not one that is that way. So you can see right here, price is trying to bounce off of that 50 and 200. We're getting a golden cross. So I can see why this is looking attractive to you. But PMO still pointed downward. And again, if I'm going to get in a juiced fund, I really have to totally not like the sector. And I have to say, I think the sector looks not great, but not bad enough that I would go this direction. I think that pretty much covers it. We are at the 10 o'clock mark. I am sorry. I see all kinds of symbol requests out there that we weren't able to get to. But really enjoyed having you in the room, Dad. And I know we're going to see you next week, more than likely. We'll see. My mom's in the hospital having some procedure done. So we'll have to see how she's feeling next week. But that's pretty much it for the DecisionPoint Trading Room. I hope you enjoyed it. And do check us out at DecisionPoint.com. Carl showed you all those indicator charts. Every chart he showed you is in the DP alert every night in our market letter. And DP Diamonds, like I said, if you enjoy the trading room experience, you get your very own on Fridays for an hour and a half, and recordings are also sent. So with that, we're going to say goodbye and thank you for attending. We'll see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.